Hello, Business 330 students. This is Professor Hassey. It's our weekend update for the end of week number 7 for Business 330. Just want to go over a couple things of the Road King case. First of all, the solutions to assignment 3 are posted in Blackboard. You can download those under the assignment 3 file folder and take a look at them. Also, the the grades will be posted by the end of the day, Sunday, October 9th. You will see your grades through assignment 3. And also we have the Road King case due this Wednesday, October 12th, but you can get an extension to Sunday, October 16th, but be sure you let me know about that because the file folder is set to close at midnight on Wednesday, the 12th. If you post after that, it will not let you post your files for that assignment. So remember, 2 files are due on Wednesday, a work file, which you have a copy of in the Road Kings file folder, which I'll show you that in just a minute. You update that file folder and do your analysis, and then an APA format paper answering the questions of the case. All right, first of all, let's just take one final look at this. Assignment number 3, which was posted on, which we reviewed in class on Wednesday. With a WACC of 7.45% with a capital structure of 60/40 debt to equity. And then that proved to be your discounted factor, your discount rate in the project cash flow, which we determined as $1.76 million of sales and inflating at 3% a year, variable costs at inflating at 3% a year, fixed cost inflating at 3% a year, depreciation $750,000 straight line over 5 years, a tax rate of 22%, a salvage value of $25,000 in year 5, which is going to be reduced by being a taxable gain on the disposal of that asset, thus you have to pay a tax. The depreciation being added back in as positive cash flow, the net working capital of 10% of the following year's revenue. That 10% is allocated in this through years 4 and then added all back at the end of year 5 by taking 10% of the year 5 sales. That is positive cash flow, thus netting out to 0 throughout the life of the project. A net present value or discounted cash flow figure at 7.45% of $1,008,006. Net present value compared to the investment of $98,006. Internal rate of return of a little bit under 11%. A profitability index ratio of a little bit over 1.11 for the discounted cash flow as a relationship to the investment, and a payback of the $910,000 investment in year 0 of 4.15 years. The project is a go because it is a positive environment, a positive return on the investment. Taking that, you're going to be now doing this analysis for the Road King case. And remember, the Road King case is simply you to review the analytical phase of the project in the various exhibits 1, 2, and 3, of which we've already calculated the weighted average cost of capital in this project, and then answering in APA format paper these 5 questions. Answer these questions based on your research, based on the data given in the problem, based on your capital budget analysis. Answer these 5 questions. Here's the Road King work file that's posted in the Road King file. This is the file that you can download and do your work on. A lot of it's already preset. You just have to do finalize the numbers of very similar to what you did in assignment 3 with a couple of different caveats. First of all, in our class on Wednesday, we went ahead and determined that the weighted average cost of capital, the discount rate to be used in this problem is 7.95%. That's with a capital structure of 50% in debt and equity, with a after-tax cost of debt of 4.55%, a cost of equity through the capital asset pricing model based on a market of 1.35% risk-free, 8% market premium, and a beta of this specific Road Kings company of 1.25. That's 11.35%. Weighted 7.95%. Then you are to take that amount and then I'll apply it to the variables given in the case with an investment of $1 billion, training costs for the first 2 years of $200,000, a salvage value in year 20 of $10 million, a depreciation per year of $50 million. 11,000 units are to be sold every year at a sales price of $220,000 with an annual inflation rate after year 1 of 6.5%. Remember, in your analysis, just like we did in assignment 3, no decimals required for dollars. All dollars are whole numbers. The only decimal places should be in your percentages and your return analysis. That goes to the nearest 2 decimal or 100th decimal. Your variable costs in this case are made up of $50,000 of labor cost, $95,000 of parts, and for the Detroit engine, a $25,000 engine cost. That's totaling $170,000 per unit in year 1, and that'll be inflated at 6.5% after year 1. Your fixed costs are $250 million. That's also inflated after year 1 at 6.5%. Your tax rate in this problem is 30%. Your annual change, your working capital change as best on next year's sales is 10%, the exact same as it was in assignment 3. The only other unknown, and that's the subject of this video this morning, is determining the second type of variable costs, and that is called warranty. We split it between the other variable costs because the other variable costs are stagnant. They're at that $170,000 unit for every year, inflated. But the warranty cost is a different thing. Remember, with the warranty costs on the engine for the Detroit engine and for the Marcus engine are for 5 years of costs. It's a 5-year warranty. So what you have to do is you have to determine the present value of all those 5 years of cost to put in each year of the investment per unit. So every unit made has, in the Detroit engine, $1,500 for 5 years of a cost. For the Marcus engine, every unit produced years 1 through 20 has a warranty cost for 5 years of $3,000. So your job now is to take those 5 years of costs, $1,500 and $3,000, and determine the current or present value of that over the 5 years to today's value. And that's the value that you're going to use as a variable cost per unit for your analysis. 2 questions you have to answer. Number 1, what would be my discount rate? What would be my discount rate to discount it over the 5 years of cost? And second question is, should you include inflation in your present value warranty calculation? Once you determine that present value, that amount is going to be the same in year 1 through year 20 because you're including all 5 years in one number. So since you are including all 5 years in one number, should you include the inflation rate in those 5 years? Those are the 2 questions you have to answer to determine your present value per unit cost of warranty for the Marcus engine and the Detroit engine. That's what you have to answer in this problem. Once you get that number, then you go back to your analysis, put that number here, and that number will be multiplied by the number of units you're producing every year, and that's going to be the same every year. Why? Because if you included the inflation rate in your warranty calculation, you don't have to worry about inflation because you got it covered in the present value analysis. You do have to worry about warranty for the other variable costs. That's why we keep that line separate. So your job is to sort all that out, put it in the spreadsheet, and do the arithmetic and determine the net project cash flow and then the return analysis, very similar to what we did in assignment 3. It's just the numbers are bigger and the project length is bigger, 20 years. If you want to put drafts of your spreadsheets together and send those drafts to me for a review to let you know that you're on the right track, please go ahead. Email me those a draft of a spreadsheet. Let's say you do the Detroit engine before you do the Marcus engine. Why don't you send me a draft of those of your analysis? And I'll let you know that you're on the right track or where you might need to make some adjustments. You have that right over these next few days to do that before Wednesday. After Wednesday, no more analysis for me anyways. Okay, that's where we stand this week 7 weekend, heading into week 8, beginning on Wednesday, October 12th. So all the grades will be posted before the Wednesday, so you see where you stand coming into the Road King paper. Also on Wednesday, I'll post the examination for the last 3 or 4 chapters, 16, 17, 18, 19 of the class. And our lecture on Wednesday will talk about chapters 16 through 19. And then we can wrap this class up. So you have a few days now, today or this weekend and into the week, to wrap up your analysis and then write your answers in APA format to the paper, and then you're done with that. Take your time. If you have questions, let me know. All right, everybody, have a great rest of the weekend. This should help you finalizing your Road King work, and we'll see you all in class. And I hope to see every student in class this Wednesday. Until then, adios.